Hey guys, welcome to another edition of the Trade Genius Podcast. Bob and Phil here as always. Guys, everybody you talk to right now is super bullish. Everybody's bulled up. I think a new bull market is here, but we got to confirm that with the economic data. So we're going to share that with you today, and you might be surprised at what you see. So let's dive in.
Trade Genius.
Hey guys, I want to tell you something that we do that really will change the way in which you look at trading and also absolutely help you increase your profitability and how much money you make. It's the Trade Genius newsletter. We put the newsletter out Sunday night through Thursday night, and this really looks at the plumbing of the markets and helps prepare you for the next trading day and help you make money. And we give you a lot of information. We give you market statistics, we give you market levels, we give you the seasonality, what's happening with different sectors of the market, and we will help you identify whether the market's in a bear mode or a bull mode, or whether it's euphoric, whether it's despondent, and it just puts you in a position to be on the right side of the trade. So take advantage of our offer that we have below, and you'll love it. I mean, one trade that you make with this thing can pay for definitely a month, maybe even a year's worth of service. It's that powerful. Use promo code podcast for 15% off the retail price of newsletter. Thanks for listening.
So Bob, the sentiment right now all over Twitter and everything is just, bull, 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 bull. Problem with that is that we have some pretty obvious indications that the actual data for the economy isn't where it's supposed to be when you are going into a bull or the end of a bear market.
Yeah, it's funny. I wouldn't say the sentiment is everybody's bullish. I think everybody is capitulated. Wouldn't that be a fair way of putting it? Everybody's like, oh, this market should go down, but it's not going down. But that's not really true because, once again, if you look at the daily breadth readings, and we're going to get into that a little bit, is that there's very few stocks are moving higher, and they're the ones that are getting all the attention. But the point of our podcast today is to show you, have no fear. The alligator jaws snap down. And this first chart we have is really the contraction in the leading economic indicators and how they track with the stock market. And remember, I was telling you guys yesterday is that people think, oh, the stock market leads. Stock market never really leads. The economic indicators typically lead and the stock market follows. And you've seen that here again. You have this move down in the leading economic indicators, and the price is resisting that. And so once that gives way, it'll snap down to that price. But that's not the only chart we want to show you. We have a few more that are really interesting. This is the household excess savings. This is what everybody is using to say there's money on the sidelines. But it's been draining out massively now over the last almost, I guess now, just nearly 2 years. And it's pretty much all used up. There's some people out there that have the money, right? But they're saving it. If they haven't spent it yet, they're not spending it. Once this money gets taken out, and this is what Wall Street's doing. They're sucking up all of this excess savings. They want it for themselves. And once they have it, it's going to be sold to you. So it's a big problem, but it's going away fast. $1.6 trillion has already been drawn down, Phil.
Yeah.
And it's amazing. And I think people really can't get their arms around that. And then this is what it means once the money's gone.
Yep.
Okay. And Phil, we were just talking about this. This is exactly what, when we say it's going to be kind of like an inflationary depression, this is what it looks like when you don't buy anything you want. Okay. You only buy what you have to have in order to survive. And that's what this looks like. I mean, look at this thing. Anything discretionary is I'm not doing it. 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 But what are we doing? We're going to the grocery store and we're eating to stay alive. And that's just amazing to me. And I'm going to throw it back to you. I'd like to get your thoughts on that too, because I think this chart, when you showed me this chart, I said we have to show this one today. This is amazing. So people, remember, bullish sentiment on Wall Street, but bearish sentiment in Main Street. Main Street eventually wins. And this is really amazing.
The fact that the only two things that show no intentions of pulling back on are household items and supplies and groceries. So basically your staples, which I think, as we go into the, once this short squeeze is over and reality sets in on this market, which it always does. I mean, this is just like August of 2022, right? Everybody was same sentiment, same price action, liquidity is going south, not confirming, fair values overbought, right? At euphoric levels, right? You can't, whenever you get euphoric on that thing, it's just go short and wait, right? It's like every time. And here we are again. But as we snap back down to reality, which is coming, I think your staples are, along with some other, like typically gold and, Bitcoin for that matter, this cycle are going to fare better, I think, in this downturn if you're looking for defensive plays. But I don't make one mistake. Everything's going to come down. It's just some will fare better than the broad market. But I don't, when you have a consumer economy, this is not what you want to see. Like if you're betting on the economy, if you're betting on a bull market, if you're betting on a recovery, the intention to pull back on everything but staples is exactly what you don't want to see. Because how many stocks in the stock market are into groceries and toilet paper, right? Your staples, Ziploc bags. How many? It's not Nvidia, it's not AMD, right? So I think this is a very, very stark signal that we see here. This is the first time I saw this chart. I mean, we've looked at this, I think, before, but I've never seen it where it was just everything negative now going forward, right? Because this is the intention now, okay, going forward, and everybody's looking to pull back. And these are not small numbers. I mean, people are looking at 20 to 30%, 20 to 25% actually on reduction in spending on these items. So I don't see it, Bob. I just don't see a bull market here, and I see everyone's burning through their savings. So where's the economic incentive for this market to go higher? Again, I think this is just a short squeeze, Bob. This market has a lot of leverage in it, which works both ways. So you're going to get, as we've seen in this market, these downturns. I think people forget how fast this market drops. If you go and zoom out from 2022, we're down, right, from 2022 January.
Yeah. So people aren't cutting back because they want to. That's not in people's nature. You cut back when you can't buy anymore. And so savings are gone. Credit limits are being, there's a chart we didn't show basically saying the banks just aren't lending anymore. You got to be pristine for them to approve you for anything at very high prices. And so it's a problem, and there's you're looking at AI is a thing. So I'm looking for cracks in AI. I'm short a stock, SMCI. Okay. I bought puts on it when it was at 220 and I bought the 190 puts on it and it went up to 265, 266, making me look like an idiot. And today it dropped 30 points. Just out of the blue, Phil. 30 points. Whoosh. My puts went in the money because the VIX exploded. I think that's what people don't realize. Right now, the smart traders are loading up on what we call cheap puts because the VIX has been down and everybody's long. The skew is long. Right. So for anybody bold enough to buy puts, you're not paying a lot for them.
Right.
And so the smart move is get yourself some July. And if you're still a little worried, put yourself out to August on these puts. Out of the money, they're dirt cheap. And what happens is when you start rolling over, you don't even have to hit your strike price to make money. The VIX, the volatility index, will explode and explodes the value of your options skyward. And so there's tremendous opportunities here. So I think it's just a matter of time. Look, gold and gold miners. You're talking about pause. If you're going to pause tomorrow, wouldn't gold and gold miners be sniffing that out, ready for Action Jackson?
Yep.
They were down today, Phil.
Yep.
Oil was down yesterday, a little bit of a relief rally today, maybe into tomorrow. The bull markets are not made for when your economic sensitive stocks are falling.
No. And copper, has been also waving the warning flag. But like, again, Bitcoin today too is weak, right? And crypto, the altcoins have been just in a bloodbath with all this regulatory stuff. But if I could swing back to that leading economic indicator chart, what we have here, if you guys notice, is that the black line, which is the year over year change in the leading indicators, is below zero. So if you see on this chart, normally, the year over year change in S&P 500 is right along with that. But those two rectangular areas that are drawn on the chart is what you really need to pay attention to, because as Bob was saying, those are the alligator jaws, and they matter a lot when the leading indicators are below zero. Okay, and that's not only do we have that, but we also have the year over year change on the S&P 500 at zero. Okay, so we have jaws at the lowest level that we've seen in a very, very long time. Levels here are along with the dot-com boom, which is ironic because we are having like a dot-com boom 2.0 kind of, except it's only in a very, very, very small set of stocks versus it was really broad. It's just you have actually more money than the whole entire dot-com boom, except of it being in a bunch of different stocks. You only have it in like Nvidia, Microsoft, just very small concentration. And so It's not healthy. It's basically what you see in short squeezes, and you can think of it like, toothpicks holding up a brick. They don't last very long.
No, and if you look at that same chart, Phil, in 2000, it went negative too, and the price followed. And just so you know, NASDAQ went down 80% from the highs in 2000. Okay.
Mm-hmm. Yep.
So, and trust me, I was in the industry 1999, 2000. And if you and I were doing a podcast today, people would be laughing at us thinking we're the biggest idiots in the world. Bill Clinton balanced the budget. They were talking about maybe not even producing treasury bills anymore because we don't need them, because technology is taking over the world, just like AI, but it was internet. Take over. This is a brand new day, yada, 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 blah, blah, blah. And then 4 months later, we started a 2-year 80% collapse in NASDAQ. And same thing in 2008. Fed got us covered. Remember the Time magazine? These guys saved the world. They saved the world, and then Bear Stearns and Lehman went under, and even the infamous Goldman Sachs had to become a bank in order for it to not go bankrupt. The most pristine of the white shoes was caught goofy-footed. Well, that's the thing that amazes me the most on this, Phil. These guys actually eat their own cooking on this stuff.
Mm-hmm.
And they just get swept aside by the tsunamis that show up. This is going to be no different.
No different. And I think people need to frame it like this. Whenever you have a new, whatever it is, technology that kind of goes mainstream, especially in the stock markets, you get a big bubble, right? Okay, so let's look at the .com, right? So internet, right? Internet jumps up. Everybody, people are selling routers. People are selling hardware. I mean, remember Juniper Network, all these, Redback, all these guys, right? Most people haven't even heard of them because it's been so long. Everybody that had anything to do with internet, right? Pets.com, whatever it was. Okay. Everything from that point, even the blue chips. So blue chips down 80%. Blockchain comes along. 2017 is the blockchain bull run, right? What happens? Most everything, the blue chips down 80%, right? Bitcoin, Ethereum down 80%. A lot of the altcoins never recovered, just like Pets.com. This time around, we got AI. And it's kind of weird because we're peaking out here in a situation where the broader stock market has already made significantly lower highs, but tech's having this one last squirt here. But again, it's AI. So what do you think is going to happen to Nvidia, to AMD, all these AI plays? They're going to go down 80%. And you can't tell people that. You couldn't tell people that in 2000. You couldn't tell people that with blockchain in 2017. And you have a real hard time right now telling people that now, right? They're just looking at you like you're crazy. It's going to revolutionize things. It is going to revolutionize things. But the way the stock market works and the way bubbles are, you typically will get your initial bubble. Then you're going to get your 80% drawdown, and then your real valuations can continue to climb higher. So I'm not saying AI is not going to be a game changer. It is a game changer. I use it every day now for a lot of just tasks for, speeding up my workload as far as, maybe like taking information and condensing it down for me. It's awesome for that. But these valuations, 30 times earnings on Nvidia, I mean, it's unheard of. It's unsustainable. Fundamentally, it makes 0 sense. Like, remember the Sun Microsystem example, right? Even at Sun Micro, I think it was 10x. He said you have to give away everything for 10 years. So you're going to give away everything on Nvidia for 30 years? I don't think so. So these valuations are going to come back. They're going to have a mean reversion. We're way out there in the standard deviation land on stuff, and it's just not a good spot. I don't care what you think. Historically, buying this far out from the mean of the actual growth projection on the stock chart, buying this far above it never does anybody any good. And I can't recommend doing that. You just have to be patient, let this thing come back in. These are good plays for the next 10 years, make no mistake, but not here.
Yeah, and I think too, people don't understand, AI is not some moat, okay? You look at the proliferation of code that's out there now for you to use, and AMD and NVIDIA aren't the only players in this space. They're just the most visible and most notorious. So you just got to be really careful here. Look SMCI went up 300%, and they're a freaking retailer of NVIDIA's products. So, and I think the market's caught on to the fact, saying, wait a minute, these guys have no IP at all. And so, they're just drafting off somebody else's IP, which is intellectual property. I'll make 2 final points points, Phil. One is that I think you and I are too old, and so our skeptical meter is up probably earlier than other people just swimming in the soup right now and saying, "Hey, Grandpa, you don't know what you're talking about." And the final point I made, Phil, is one that you make all the time: is that you got to protect your rear end before you worry about all the cash coming into the shop. So I really appreciate you guys, and look forward to hearing what Jerome Powell has to say tomorrow, and then we'll take it from there.
All right. See you guys tomorrow. Take care. Bye-bye.